Let me ask you something honest. When was the last time you saw a list of stocks that genuinely surprised you? Not the same 5 names everyone keeps recycling, not the tickers that have already been screenshotted 1,000 times this week. I mean a real surprise. A business you had never thought about before, sitting at a price under $2, with a story that actually holds up when you dig into it. That's what today is. 5 stocks, all trading under $2, all verified by me personally before I wrote a single line of this. And every single one has a story that most people in the retail investing world have not connected yet. Stay until the very end, because the last one I'm going to show you involves something that millions of people in this country deal with every single day, and a technology that didn't exist until a group of engineers and scientists from MIT and Harvard decided to build it. Here's something I keep coming back to when I look at the market right now in July 2026. Everyone is crowded into the same handful of names, the mega caps, the AI darlings, the stocks that get talked about on every podcast and every finance channel every single week. And I understand why. Those stories are real. But here's what that crowding creates. It leaves entire sectors of the market completely ignored. Companies with real products, real customers, real catalysts happening right now, trading at prices that don't reflect any of it. That's the opportunity I spend my time looking for. And today I found 5 of them. This company owns one of the most beloved makeup brands in the world, a brand trusted by beauty editors, celebrities, and millions of consumers for its clean formulas and bold aesthetic. And just last month, this company sold its other major skincare brand for $460 million. $460 million, and the stock is still sitting under $2. Let that sink in. The sale closes in Q3 2026, debt gets paid down, and what remains is a focused, debt-light company built entirely around one powerful brand with global expansion ahead. Milk Makeup generated over $110 million in revenue in 2025. The analyst who covers the stock just raised their price target to $2.28. Current price near $1.55. The company is Waldencast plc, ticker WALD, listed on NASDAQ. Stock 2 takes us somewhere completely different. To the ocean, and specifically to something I think most investors have never considered as an investment before. Right now, there are autonomous systems deployed off the coast of the United States that generate their own electricity from ocean waves, run sensors, cameras, and communications equipment for months at a time without any human crew, and relay maritime intelligence back to shore around the clock. The US Department of Homeland Security contracted this company. The US Coast Guard placed purchase orders, and this year the company announced a deployment that integrates their systems with the Lattice platform, a product built by Anduril Industries, one of the most closely watched defense technology companies in the country right now. This same company also builds an autonomous surface vessel, an unmanned patrol boat that can cover coastlines and gather data without anyone on board. International defense clients in Europe have signed on. A Nordic underwater research customer placed an order for immediate delivery. Their backlog and pipeline are growing fast. The stock trades near 26 cents. It just completed a $10 million stock offering to fund operational expansion. The company is Ocean Power Technologies, ticker symbol OPTT, listed on NYSE American. Earnings are due July 15th, 2026, which means a catalyst is coming fast. If this kind of research is useful to you, real stories, verified numbers, no recycled tickers. Hitting subscribe literally takes 2 seconds and it helps me keep doing this work every single week. Stock 3 is one of the most unusual stories I've come across in a long time. And the reason it's unusual is that it's a company generating real revenue, serious revenue, trading at a valuation smaller than the cash sitting in its own bank account. Let me say that one more time. The market is pricing this entire company at less than the cash on its own balance sheet. Not the business, not the revenue, just the cash alone is worth more than what the market says the whole company is worth. Here's the story. Las Vegas, 2011. A group of gaming veterans ask a question nobody had seriously asked before in the mobile gaming world. What if the rewards inside a mobile game were actually real, not fake digital coins? Real hotel stays, real show tickets, real dining experiences at actual venues. They built the technology, signed deals with major resort and entertainment brands, and created a loyalty ecosystem that had genuinely never existed before. Players earn points inside mobile games, social casino titles, card games, solitaire, and redeem them for real-world luxury. The company went public on NASDAQ in 2021. Annual revenue reached $235 million in 2025. Gross margin is 75.6%, exceptional by any standard. Positive free cash flow of $26 million, completely debt-free. The stock fell below $1 in late 2025 and received a NASDAQ compliance notice. The company transferred to the NASDAQ Capital Market tier to buy more time. Two analysts carry a buy rating with a price target of $3. The stock trades near 50 cents. That is a company with $235 million in annual revenue trading below the value of its own cash. The company is Play Studios Incorporated, ticker symbol MYPS, listed on NASDAQ. Stock 4, same company as Stock 5, but a completely different program, different disease, different patient population. I'll come back to explain why in a moment. Founded in New York in 2008, this biotech set out to solve something that tens of millions of Americans live with every single day: chronic lumbar disc disease. The discs between the vertebrae break down, compress, and the pain radiates down the leg for years. Standard medicine offers two options: manage the pain with drugs or surgery. And surgery helps some people, but not all. Nobody had found a way to actually repair the disc itself until this company tried. They built a therapy called BRTX-100 using stem cells from the patient's own bone marrow, cultivated in a low-oxygen environment that specifically mimics the disc, and injected directly into the damaged tissue. In their completed Phase 2 trial, 52% of evaluable patients achieved at least 50% improvement in both pain and function at 52 weeks. In May 2026, a Miami-based activist hedge fund filed with the SEC disclosing a 4.9% stake. That's an outside investor doing their own deep research with their own money and deciding the market is missing something. Roth Capital maintains a buy rating. The average analyst price target is $8. The stock trades near 34 cents. And now the one I mentioned at the very start. And this is also the second story from the same company. There's a condition called upper limb paralysis. Stroke survivors, veterans with traumatic brain injuries, people with spinal cord injuries, millions of Americans who have lost the use of one or both of their arms. For decades, the solution was physical therapy and adaptive tools. And then a group of engineers and scientists from MIT and Harvard asked a different question. What if you could build a device that reads the electrical signals the muscles still produce, even when the arm is paralyzed, and uses those signals to power a motor that physically moves the arm? That device exists. It was built in Boston in 2004. The FDA registered it as a Class 2 medical device. Medicare covers it. The Veterans Administration buys it for veterans. It is called the MyoPro. In Q1 2026, revenue hit $10.1 million, beating analyst estimates by over 9%. Gross margin came in at 68.2%, the highest the company has ever recorded. And here is the part that personally stopped me when I was doing this research. A director of this company went into the open market in June 2026 and personally bought 40,000 shares with his own money. Not options, not compensation, an open market purchase. 4 analysts cover the stock. All 4 have a buy or strong buy rating. The average price target is $4.42, against a current price near $1.04. The company recently expanded access through Ottobock Care Clinics nationwide. Next earnings are August 11th, 2026. The company is Myomo Inc., ticker symbol MYO, listed on NYSE American. And here is why I told you that Stock 4 and Stock 5 share the same ticker. The same New York biotech behind the disc therapy, biorestorative therapies, also has a completely separate platform called ThermoStem, using brown adipose-derived stem cells to generate functional brown fat in patients with obesity and type 2 diabetes. Instead of suppressing appetite the way GLP-1 drugs do, this approach rebuilds the body's own energy-burning machinery from inside. Same ticker. 2 completely different diseases. One analyst target of $8 on a 34-cent stock.